Hello, I'm Angeline Ong, and welcome to Beat the Street, the show that gives you all the tradable news and data you need ahead of the Wall Street Open. And what a day it is! We've got the non-farms on deck, waiting on that data to assess the Fed's path on interest rates, yields and earnings, surging bond yields, and the earnings season is likely to dominate the week ahead. And we're also watching Snapchat for you. The UK data watchdog has issued Snapchat with a preliminary enforcement notice over a possible failure to properly assess the privacy risks of its generative AI chatbot to users. Now, good afternoon. I'm Angeline Ong, and welcome to this new edition of Beat the Street. Just before we cross to Daily FX's Richard Snow, we've just got those details are out. Non-farm payrolls coming in at 336,000, way more than expected. We were expecting 170,000. Unemployment rate, 3.8% was the actual figure, slightly above the 3.7% expected. Let's cross now to Richard Snow. Daily FX, of course, part of IG. Richard, what do you make of these figures?
Hi, Angeline. That is quite a big move, quite a difference from the forecast. We were expecting only 170,000 jobs to be added in September. Turned out to be quite a bumper month. And as you can see, that has just elevated the dollar, which had shown a bit of a counter trend move this week in line with US yields, broadly speaking. And the majority of FX pairs had been experiencing a bit of a pullback. That now reversing, essentially, we're seeing a continuation of the underlying narrative in the markets right now, which is that the Fed needs to maintain a higher monetary policy for longer, or elevated monetary policy for longer. So the fact that the labor market is still surging on, it poses a worry for the Fed, of course, and we're seeing the dollar picking up some more strength as we head into the weekend. We're also seeing US Treasuries, the 10-year Treasury. This is something that's been in the news of late quite a lot. And this is just showing, once again, just a continuation of the fact that there is that increasing term premium. Purchasers of bonds are demanding higher compensation to have their money locked in for a longer period of time. And that is something that is looking like it is set to continue. So quite a big move on the bond front. If we take a look at euro dollar, of course, the dollar basket, which we viewed straight away, the dollar basket is mostly comprised of euro dollar. And unsurprising there to see a turnaround at the trend line. We're seeing a move lower in euro dollar. Not seeing many drivers behind the euro. We had a very negative PMI data earlier this week. So the fundamental outlook in Europe is still sour, it must be said. So we're expecting a bearish trend continuation on euro dollar, now beneath 1.0520 there. And if we just cycle through to dollar yen, which is an interesting currency pair for a number of reasons, the most notable one is that threat of FX intervention. And the fact that we saw such a bumper jobs print means that the dollar is going to be enjoying some of those tailwinds. And what that does is it places us in quite a predicament as far as dollar yen is concerned, because the closer we get to that 150 mark, the more likely we are to see some sort of FX intervention from the Bank of Japan in conjunction with Tokyo officials there. So the closer we get to 150, the more nervous markets will be. And we look to the end of the afternoon where we could possibly see some movement on that front.
Richard, that's really interesting. Also looking out for the yields, which is another interesting space. After those numbers, the hot print, as you rightly said there, US 2-year and the 10-year yields rising. And also looking at volatility, we're seeing a huge spike there. Do you think this hot print will mean more volatility in the coming week?
Yeah, I do. I think that will only continue to move higher. I think markets were pretty much on pause for the last 2 days, just waiting for this non-farm payroll print, and correctly so, because we've seen how unpredictable it can be. So heading into next week, of course, we get that US CPI print, and markets will be looking ahead to that. Although we have been seeing positive developments in inflation, so perhaps that then will act as a coolant for what we're seeing now. But very much to the end of this week, and of course for the start of next week, I anticipate that this trend will continue.
Thanks very much, Richard. Just want to show you also these charts here, which is the Wall Street on the IG platform. As you can see there on the hourly chart, futures are turning south after that very hot print for the jobs figure, much hotter than anticipated. Just also bringing out the US 500, which is the S&P 500. As you can see there, similar reaction as I mentioned earlier. Next week, huge in terms of volatility after that hot jobs number, not just because of yields, but also further volatility will come from the start of the third quarter earnings season, with major banks, including JP Morgan, Wells Fargo, Citigroup, and asset manager BlackRock reporting to boot. Now, there's been so much emphasis on yields, on indices, and oil, on the future path of rate hikes in the US, that when I caught up with IG's Axel Rudolph, I asked him to take a look at some of the lesser known financial instruments with a trading angle. Axel?
Well, today I thought I might look at the Russell 2000, the great underperformer of US equity indices, being down by about 1% year to date. And it is interesting from a technical perspective, because you can see here that basically this week's low at 1,706 was made marginally above the key support area between 1,700 and 1,690, made up of the December 2022 to May 2023 lows, as you can see here. So that key support area currently holding, and we could perhaps see a bounce back over the next few days, take us back to the late September low, 1,762. But at the end of the day, the trend is your friend. And the question is that still pointing down? Yes, it is, of course. But perhaps if we can hold above this key support area, we might see another bounce, as we've seen, or at least a sideways trading range, as we saw back in March to May of this year.
Thanks, Axel. We're seeing major moves as well in the mega growth stocks after that hot jobs number. Taking a look at Amazon, which is an all-session stock here. Meta as well, a similar picture on the hourly chart. However, back to Amazon, we're still keeping an eye on a story on Amazon expected to launch the first 2 prototype satellites of its long-planned Kuiper internet network aboard an Atlas V rocket from United Launch Alliance to test its internet satellites in space for the first time before deploying some 3,200 more. But as I mentioned earlier, these moves, these hourly moves on the platform, on the markets, more to do with that very hot jobs print. Also checking in on Microsoft for you, because Microsoft is likely to show the same sort of move on the hourly chart. Microsoft also all sessions, as you can see there, that arrow, down arrow there. However, if we look at the daily chart, not a huge amount of reaction. We are, of course, waiting on Microsoft, apparently set to have October 13th as a closing date for its $69 billion purchase of Call of Duty publisher Activision Blizzard. Just checking in on Tesla as well for you. Tesla is, of course, the EV maker that is headed by Elon Musk. And Tesla has cut its US prices of its Model 3 compact sedan and the Model Y SUV. If you are a Tesla fan, you'll know that Tesla has been cutting prices in order to keep its numbers up in terms of sales. Tesla not showing perhaps the kind of move that is linked to the story, but many of the mega caps and very liquid stocks are reacting to that hot jobs print out of the US. Also want to check on Rivian for you. Rivian is another EV maker and seen as a big name in the EV truck space. Rivian fell by nearly 23% on Thursday, just showing you the daily view here, if I may. And that was because this is the biggest percentage daily decline since their debut in 2021. This is because it unveiled plans to issue $1.5 billion worth of convertible green bonds. We'll be keeping an eye on that one when it starts trading in the not too distant future. This is not an all-session stock on the IG platform. And Snapchat is also another interesting story because Britain's data watchdog has told Snapchat it plans to issue a preliminary enforcement notice over a possible failure to properly assess the privacy risks of its generative AI chatbot to users, especially children. John Edwards, the Information Commissioner, said the early findings of their probe suggest a worrying failure by Snap to adequately identify and assess the privacy risks to children and other users before launching My AI. So many of the players in this space in AI have been under increasing regulatory scrutiny as they roll out products that perhaps might not even have the right clearances in place yet, because everyone is still finding their feet in this new world of AI. There are potentially likely to be more regulatory hurdles to come. Checking in on Exxon as well, because Exxon is an all-session stock on the IG platform. This is the daily chart here for you. Let's turn it to the hourly because Exxon is in advanced talks for a $60 billion acquisition of Pioneer. That's according to sources, so it's not been confirmed yet. We're keeping a close eye on that story for any developments, but at the moment, no reaction on the hourly chart. Now, before we go, just a quick look again at the indices. As you can see there, spiking lower, Dow Industrials spiking lower after that hot print, alongside the other usual suspects as well. Volatility, of course, spiking higher there after we had news that we added or saw the US economy add way more jobs than expected. Added 336,000. The consensus was 170,000. And that's the latest from me in this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insight, do follow me on @Angeline Ong on Twitter. This is IGTV.